Hey everyone, welcome to another episode of Hot Kitchens. Today we're coming to you from 330 East 49th Street, apartment 12E. This is not only a beautifully renovated 4-bedroom apartment, but it also has this unbelievable private terrace with views of the East River, and best of yet, an outdoor grill that we will cook live on today for the first time. The main focus of today's episode is this beautiful steak. But in addition to that, we're gonna use the open flame grill to do some peppers, onions, and a little bit of squash as well. We're going to leave the vegetables in pieces that are large enough to sit comfortably on the grill, because we can always cut them up later. You don't want them falling through the grates. We're gonna use just a little bit of olive oil to season, and then we'll put some salt and pepper on at the end. Make sure that while you're grilling, you're paying attention to how close the steak is to the flames. Make sure to get both sides of everything nice and charred so that you get that beautiful grilled flavor. Before things become too well done, take them off the grill, slice them up, add salt and pepper. The goal in the steak is to achieve a nice medium rare consistency. A little disclaimer, when you're doing live cooking, not everything comes out perfect. So the steak did come out a little bit more well done than I like, but it still tastes great. We're so glad to have Scott Nadler from CrossCountry Mortgage here with us today. Scott,
it's good to be here.
Welcome to Hot Kitchens.
Thanks, Josh. What's going on?
We always start with a couple of standard questions. So the first thing, everyone has at least one utensil or an appliance that is absolutely essential to their lives or how they cook. What would that be for you?
I have two.
Okay.
So I've got an Aqua True reverse osmosis water filtration system. I know it's a mouthful,
okay,
but it's very valuable to me. And then I recently won a rice cooker,
okay,
in a raffle, which I'm very excited about.
Are you using the rice cooker for rice or other
rice?
Okay.
For rice.
All right.
I love it.
Those are invaluable.
They are.
Now, this might be super subjective and I don't want you to offend anyone, but is there a meal or a restaurant or just a place in the world that is your just favorite dinner, lunch, whatever it is you've ever had? It could be a cup of coffee.
I think overall, I mean, I love sushi. I love Mediterranean food. We're in New York. There are so many good options for both of those choices.
Have you ever mixed the two?
At like events?
I'm kidding.
I think they
go well together.
Definitely be mixed at like a wedding or something. But I think those are my two favorites.
Got it. Yeah. Got it. We'll get into a little bit more of your business and loans and whatnot, but I'm sure throughout your career you've probably been in and out of a number of properties, places you visited. Is there any sort of kind of dream kitchen you have in mind? Do you have your dream kitchen? What would that look like?
I don't know if I have a dream kitchen, but again, being in New York, you see a lot of amazing kitchens that are very spacious with big islands I love. My first apartment in the city had a really small fridge, like a fridge you would have in a college dorm room. So whenever it's one of the first things I always see. I'll just look at the fridge and I'm always like, oh, it's a nice size fridge.
It's almost more than a bottle of water.
Exactly. But yeah, a nice big island, a big fridge. For sure.
So Scott, we're here in this apartment on 49th Street and 2nd. One of the incredible features of it, which we've seen from the cooking, is that we have this huge outdoor space. There's actually two of them here. What happens in the loan underwriting appraisal process when you have an apartment that stands out like this, where almost no other apartment in the building, let alone maybe in the area, has this kind of feature?
Yeah. Appraisals are really done on comps. So if this is a hard property to comp, that could cause some complications when it comes to the mortgage process. So, you know, it's really up to the appraiser and recent sales that were in the area. But again, this is a unique property that could be hard to comp, for sure.
Well, hopefully we get them here, we can serve them some steak and convince them otherwise.
Exactly. And look, if someone's putting down a good amount of money, then the appraisal is really not going to impact that loan.
Right. When people are purchasing a home where they're going to have to do work, or maybe they've lived there for a couple of years and they want to do some renovations, build up their dream kitchen, what is the market today like for someone trying to borrow money for that process? Because the truth is, it's expensive.
Yeah, absolutely. I think if someone already has a mortgage, The challenge is they may have a mortgage with a 3% mortgage rate.
Right.
So in a typical market, what you would do is you would look at doing a cash out refinance to recoup the funds, tap into the equity that you have in the property, use that money to renovate. Now it's hard to do that because, again, you don't want to give up your low rate. So people are looking at home equity lines of credit. Those are options. And some people are doing cash out refinances. We're looking at people who have, let's say, an adjustable rate mortgage that they took out 4 years ago. Now their loan is going to reset soon, so maybe now is a good opportunity for them to pull some cash out. I can also answer it in terms of like if you want to say, and what if someone's purchasing a home?
Right.
Like we can do it that way.
What if someone's purchasing a home and they're going to have to do work?
Yeah. So the first thing we'll look at is how much do they want to put down. If someone was initially thinking about putting down 50%, let's say, maybe they put down 20%. So they save that 30% to use to renovate the home. If, let's say, from the get-go, they were going to put down 20% or 15% or even 10%, then we'd look at doing a construction loan for them.
Okay.
Where you would look at, I'm buying a home for $600,000. The cost to renovate is going to be $400,000. So that's $1 million. We can lend them 80% of that combined value.
And do the rates change in those situations?
Yes. So during the renovation period, you'll have an interest-only loan. The rate's above where the market is, but you're just paying interest only. Once the renovation's done and the home is complete and the appraiser comes out and inspects, then it becomes a fully amortized loan.
One of the things that I've learned from my career is that part of the appraisal process is making sure that everything that's supposed to be there in the apartment is there. And one of those things is a kitchen.
Yes.
Do you have any stories about when someone had an appraisal done and either a kitchen's missing or the kitchen becomes part of a problem in that appraisal process?
Thankfully, normally we hear about that up front, but brokers are creative. And, sometimes we'll see that, they'll put a hot plate in there.
Okay. Does that qualify?
That will qualify. Yeah, if the gas is turned on or water's turned on.
Can we go to your old apartment and get that little fridge?
You certainly can. It's still there. It's funny though, because I will never go to the home for the appraisal, but we'll get a copy of that appraisal report. I typically don't look at it. My team will look at it, but I will get notified, A, if something's wrong with the appraisal,
right,
or B, there are funny pictures in the appraisal. And we had a loan a couple of years ago where there was a tenant living in the property, and you would have thought that a frat party took place in the apartment because there were pizza boxes, there were probably 50 beer cans. It was a disaster, and that was in the appraisal. It didn't impact the value,
right,
thankfully.
Certainly hurt the curb appeal, but didn't impact the appraisal. That's
exactly
good. Other than the steak that we just ate, what's your favorite steakhouse in the city?
I would say Wolfgang's. And
classic.
Right around here, Benjamin's is really fantastic. I used to go to Benjamin's with my grandfather often, and he used to love that place. So I would say those two.
Love it. So Scott, what's an important piece of advice you'd give to first-time home buyers?
It's never too early to start. Always start early. Great question. Have a 10-minute conversation with someone like you.
Okay.
Have a 10-minute conversation with someone like me. Understand what it takes to get a loan. Understand what you qualify for. You don't know what you don't know. And simply having a 10-minute conversation will go a really long way. Think about someone who is employed today that wants to start their own business. That will significantly impact their ability to get financing. So what can we do now to get in front of that? What if someone's credit score is a little bit lower right now? If you have time, if you start early, you can improve that, which in turn will improve your interest rate and save you thousands of dollars potentially. So start early, have a conversation. If you're thinking about buying in 6 months from now, a year from now, even longer, have a conversation. It will go a really long way in understanding what it is that you qualify for and what this process is actually like.
There's a lot of conversations today and articles coming out about first-time buyers who are getting help from their family. How does that impact your part of the process?
It's very common. We simply need to make sure that we can document where the funds are coming from. So the funds do have to come from a direct family member. You cannot get funds from a friend. I can't gift someone. I can't gift a client.
And what
money.
qualifies as a direct family member? Does an uncle count?
An uncle would count, absolutely.
Or an aunt.
Or an aunt. Yeah, so as long as we can document where the funds are coming from, then they're gonna be okay. So that's really the most important part. We have some clients every so often where a parent does not want to disclose, they don't want to give up their bank statements, they don't want to give as much information. Also,
but that would also be if they were co-signing.
I'm saying if they're not even co-signing, they're just gifting funds to help with the down payment or with closing costs. Sometimes banks will ask for the bank statement to see exactly where the funds came from. Yeah.
Fully traceable.
Exactly. There are all these anti-money laundering laws that banks have to follow. So getting the documentation up front is very important.
It wasn't really that long ago when we were seeing rates 2%. It's obviously a very different world today.
Absolutely.
I'm sure you are asked this all the time, but what do you see going on now? What do you think might happen in the future?
New York is so unique in the sense of it's hard to say sometimes whether it's a seller's market, a buyer's market, a transitional market. You could have two units in the same building, one that is inundated with offers and going over ask, and another one that's been sitting on the market for 200 days. So with us, in terms of analyzing the entire market, it's so important to understand what market we're in. You know, for that specific buyer, are we in a buyer's market? And what's our strategy for that specific buyer? It's a seller's market, then what are we doing? So I think that's the biggest thing, really in any market. It's important to understand what we're seeing and what price point they're at and what that market is telling them. Because if it is more of a seller's market, think of COVID, right? All these homes going over ask. I remember being in the Hamptons at an open house, and there was a broker there who didn't know anything about the property. Nothing. Could not tell you anything about it. And I said, wow, for a $1.5 million home, you don't seem to know anything about it. He said, whether I know a lot about this home or I know nothing, it's going to sell tomorrow.
It's horrible.
And that was the market. Everything is going over ask. Yeah. Whereas the last couple of years, you might have seen more of a buyer's market where buyers have more leverage, where you see homes that are sitting on the market for a longer amount of time. So I think it's really important to identify that.
Well, you know, it's like kind of a combination of two sayings is, you know, all boats rise with the tide, but when the tide goes out, you find out who's skinny dipping. Right. So I feel like we're kind of in that moment now where there's a lot of people who are getting caught alone in the water.
Absolutely.
In a nutshell, is there something that you tell your clients when they're thinking about the different types of products that are typically available, whether it's a fully amortized 30-year loan, 7/1 ARMs?
It's a great question. And it really depends on A, the client, but B, every program is not created equally. So for example, because someone qualifies for a 30-year fixed, even though a 7-year ARM, the rate might be a little bit lower, the whole process, the qualification requirements are different. And that's one thing that most people do not know. So my job essentially is playing matchmaker. I need to match up the client with the right program to get them the best rate and best program that works for them. So for us, it's really analyzing everything up front, putting together a few options for them. All things being equal, if an ARM makes sense and the rate is competitive, meaning that spread between a 30-year fixed and an ARM is wide enough, I'm a big advocate for ARMs because most people, specifically if we're talking to first-time home buyers, are not going to be in their home for 30 years.
Right.
They're going to be in the home probably for 5 to 10 years. So an ARM makes a lot of sense. Again, assuming that spread, that differential between a 30-year fixed and an ARM is wide enough.
Scott, I got to ask, how do I get one of those awesome hats?
I will get you a hat for sure. This is our social media brand. We do a lot of marketing. We do a lot of, everything we do is really for agents. So all of our social media pages on Instagram and Facebook and LinkedIn, we put a lot of educational entertainment out there, and we try to make it entertaining. Mortgages, for whatever reason, are really boring, and we try to make it fun. And mortgages are a combination of real estate and money, two things that are really fun, and we try to make it entertaining.
I love it. Scott, how does someone get in touch with you?
Easiest way is to follow me here, Loan Daddy on Instagram. Feel free to contact me there with any questions.
Great. Thanks so much for joining us on another episode of Hot Kitchens. Follow us on the More Network, powered by Brown Harris Stevens.